This is Trading the Ichimoku Cloud with Michael McKay. Ichimoku Cloud Analysis is a technical analysis tool which can really improve your trading. It looks complicated, but it really isn't. The name comes from the Japanese words ichi, meaning one, and moku, meaning look. Combined, it means the ability to determine the probability of continuation or reversal in price action with just one look. The full name of this tool is the Ichimoku Kinku Hyo. It was developed by a man named Goichi Hosoda in Japan in the 1960s. It consists primarily of 5 lines and one zone called the cloud. The 5 lines are called the Tenkan-sen, the Kiju-sen, the Senku, span A, Senku, span B, and the Chiku line. You don't need to know the formulas which plot those lines on your chart. Span A is plotted on this chart as a red line, and span B is plotted as a green line. The area between those 2 lines forms the Kumo cloud, or as most people just refer to it, the cloud. The Tenkan-sen line, which is plotted on this chart in white, is sometimes called the conversion line, or just the fast-moving average. The Kijun-sen line, which is plotted here in purple, is also called the baseline or slow-moving average. Finally, the Chiku line, pictured here in red, is a 26-period lagging moving average. Now that you know what the Ichimoku indicators look like, let's see how they can be used to develop some trading rules. Rule number 1 is pretty simple. If the price is above the cloud, you can only make long trades. A long trade is one where you expect the price to rise. Rule number 2, if the price is below the cloud, you can only make short trades. A short trade means you're expecting the price to go down. Rule number 3, when the Tenkan-sen line, pictured in white here, crosses or bounces off the Kiju line, pictured in purple, and does so to the upside, it is a buy signal. Rule number 4. When the Tenkan-sen line crosses or bounces off the Kiju line to the downside, it's a sell signal. The 5th and final rule is when the price is in the cloud, you are not allowed to initiate any new trades, even when it's really, really tempting. In this example, it's extremely tempting to believe that the price is moving through the cloud, which serves as a zone of support and will break to the downside. But as you can see from this example, if you had taken out a short trade in the cloud, the price would have reversed and wiped you out. One of the greatest challenges for any trader or investor is knowing when to close a trade. Ichimoku Cloud Analysis gives us 2 indicators that can help us with that. The first is when the Tenkan line crosses the Kijun line. The second is when the Chiku line intersects the price. There's just one problem with that. The Chiku line is a 26-period lagging indicator. In this example, it's easy to see that if you closed out your long trade here, where the Chiku line intersects the price, you would have made an easy 15% gain. There's just one problem with this scenario. At this given point in time, this isn't what you would be seeing. This is a lot closer to what you would have seen at that particular time on that particular day. Remember that the end of the Chiku line is always equal to the current price, and it appears 26 periods behind where you are at this exact moment in time. By closing out your long trade 26 periods after this Chiku collision with the price, you would have ended up with 0 profits. Even worse, you would have missed this amazing bullish move which immediately follows. If we wanted to use the collision of the Chiku line with the price as an indicator of when to close out this trade, we would have had to wait an additional 26 time periods before we could even see it happen. In this particular example, we were very, very lucky that the price did not take a wild swing to the downside in the interim. As you can see from the same chart, when we zoom out, we could have closed this trade out when the price reached $19.11 for about a 15% profit. But if we just held on and maintained our long position while the price was above the cloud and did not trade while the price was in the cloud, we could have held on for at least a 43% profit when the price reached $23.71. The assumption here is that you would close out the trade and take profits when the price goes parabolic. But even if you didn't and held on just a little too long and then watched it correct to the point where it passed through the cloud to the downside, you could have closed the trade then and still come out with some profits. Okay, so let's talk about the things I really like about trading the Ichimoku Cloud. First, it gives you unambiguous trade and no trade signals, and that's really important for someone, particularly like me, who might agonize over whether or not you should pull the trigger and make that trade. Second, it allows you to see the trend with a different perspective and gives you the nuance during flat periods where the price is trading sideways. Third, it helps build trading discipline because there are a lot of trades that look very tempting and possibly would be very profitable if they turned out right, but the risk-reward ratio is just a little too high, and this helps you to spot those times. And finally, the bottom line is it helps you to reduce risk in your overall trading strategy. Of course, every trading strategy or indicator has its downsides. Here are the ones that I've been able to identify. First, it may be less useful to you in very short or very long-term trades. I happen to be a short to intermediate term swing trader. It works pretty well for me, but if you're a day trader or a long-term investor, maybe not so much. Second, you still need to use other indicators. This is not the end-all be-all indicator, not the holy grail of trading, but it's very useful. I use it alongside my relative strength index, my MACD, and my Chaikin money flow. And third, you may miss some lucrative moves, but you know what? You miss tons of lucrative moves every day. You don't lose money on a missed move. You can lose money on a move taken when you shouldn't have traded. At least the success rate and accuracy of the trades that you do make will improve overall. Here's the bottom line. Trading with the Ichimoku Cloud is easy and a lot less complicated than it looks. It's easy to back test, and it actually makes going back and wargaming out your past trades kind of interesting and fun. It will definitely improve your trading discipline, and I like it so far. I hope you enjoyed the video and perhaps even learned something from it. My name is Michael McKay.